welcome to another episode of the Kinvestor Report, where I chat with industry experts to discuss the market, commodities, stocks, and the economy. I'm your host, Arlen Hansen. This interview is not investment advice. I'm not an investment advisor or a professional geologist. However, I've been investing in the small cap junior market and kicking rocks for over 24 years. If Ken or myself has any financial interest in any companies mentioned in today's interview, it will certainly be disclosed. Do your own due diligence. Today, I'm joined by Mario Innecco. Mario is a financial expert based out of London with over 2 decades of experience in specializing in government bonds, interest rates, and exchange-traded derivatives. For over the last 10 years, he's shared his insights on sound money, financial markets, and contrarian economics through his YouTube channel, Innecco64. This is the first time I've ever talked to Mario. I'm excited to see and welcome on the show today. Mario, how you doing?
I'm doing well, thank you, and thank you for inviting me.
Yeah, no, we're excited to hear what you have to say. You've advocated for sound money for a long time. And why do you believe gold still matters in today's high technology world? Like, we've seen such a shift from where we used to be to where we are. Why does that sound money still be relevant in today's world?
Well, because despite the fact that technology advances, money or gold is always the same, and it's timeless. And I don't think we can trust a system built by man, for example, cryptocurrencies or fiat currency. And I think that's why gold and silver, to some extent, is so important. And I think as we're seeing now, even the major central banks of the global south, so to speak, or BRICs, they're accumulating a lot of gold because they know that gold is money. Maybe technology is going to help make gold more easily transferable. But at the same time, we've seen in the past that technology makes things more, how can I say, convenient, but it also leads to like a temptation by humans they always abuse it. And people say that the gold standard in the 30s was what caused the Great Depression. And it wasn't. It was just bankers behaving recklessly, writing too many loans that were not backed by gold. And when people wanted their money or their gold, they didn't have it. So they call it, oh, it's gold that it's bad. But it's unfortunately human beings that get off track. And so that's why I think gold, sound money is so important. But it's a difficult ideal to have because a lot of people don't stick to it, especially our leaders.
I'm so fascinated by what you just said there, based on trusting systems built by humans, right? Because like I grew up trusting, being, taught to trust the church, being taught to trust the government, taught to trust our banks, the Western medicine, and like how's that turned out over the last 50 years, right? Like not one of them has come true and been like an honest John all the way through, right? So no, I really am fascinated about the temptation of the technology, right? Like we're going right down to like the human, like the biology of humans and who we are. You can't trust them. Oh, I think we could go down the rabbit hole on that one, but maybe another time. So we're starting to see, and you talked about like the BRICS starting to, like the BRICS nation buying gold. We're starting to see a lot of these central banks like aggressively buying gold. Like what message are they sending to the market, do you think?
Well, that they don't trust the dollar anymore. And the dollar basically is holding treasury bills, notes, or bonds, because that has been the custom since World War II. When you have a lot of reserves, when you export, more than you import, you're left with a surplus, and yeah, you usually put it in dollars. But now there's a few factors that I think have led to a lot of these central banks buying gold. One of them is the politicization of the dollar, uh, putting of sanctions on Russia in 2014, and other countries as well freezing their reserves after 2022. The second reason, I think, is the fiscal recklessness of the United States Congress and all administrations, really. It doesn't matter which administration is in power. They keep running huge budget deficits. And yeah, and also we saw that it was it Moody's? Yeah, they downgraded the U.S. That was
Hmm.
the last of the major rating agencies that had a AAA rating. So the dollar is like not what it used to be. I mean, it kind of held its reputation after 1971, mainly because the Saudis went along with the petrodollar deal, and that made other countries have to have dollars because oil was always traded in dollars. But now oil's being traded in other currencies like the yuan, the euro, and many others. And that's what I think the BRICS are building, a multi currency system that has a common asset as a denominator, and that's gold, of course. I'm not saying they're gonna bring in a single currency, but yeah, I think gold is going to be a huge part of the system because you can't trust the dollar and you can't really trust the yuan or the other currencies that much either because they're all fiat currencies. So I think it's quite clever that they've going to gold because then people will have a little more trust. You know, if they're running surpluses with China, you know, China can pay you in gold. Um, yeah, so that's
Well, I think we go right back to what you said at the beginning. No matter what fiat currency you're talking about, it's a system built by humans.
yeah, that's right.
There you go, right?
You know, they always the problem is fiat currency should be on paper, it's like a really convenient and a really good system. The problem is when you have crises, they always make an exception, right? And then you make an exception and you start doing something that you shouldn't, and then it happens again, and you've set the precedent, and it just that's why it always ends in, going to zero, like Voltaire said.
Hmm.
So, and that's the way we're going right now because you accumulate so much debt with a fiat currency because you can't pay it off. But there comes a point where the debt is so huge that it all implodes. I mean, it's difficult to say when that's going to happen, but I think we're very close.
Yeah, I think the biggest risk of going to zero is when you think you're not at risk of going to zero ever.
Yeah,
Right.
yeah.
And that just kind of feels like the administration down in the United States has got so much, we got so much power. We're indestructible. No one's going to be able to take us down. Yeah, I think we've seen that before from other nations in the past, and that was the Great Fall, right? Many, many, many times. Right. And I don't think that this is any exception right now, to be quite honest. How concerned should investors be about the political polarization in the US right now?
Yeah, I mean, that's been happening for quite a few years now. It's very divided. And
Hmm.
if you, I don't know if you heard of The Fourth Turning, it was a book written by Neil Howe and Strauss. I forgot his first name, William Strauss, I think. And it talked about generational cycles. And they wrote this book in the late 90s, mid late 90s, and they said that we were going into the winter, which is like a 20 to 25-year period. And the last time we went into that was the 30s. And prior to that, it was 30s to early 40s when you had the Great Depression and the war. Prior to that, you had the Civil War. So we're right in the middle of the winter right now. Neil Howe wrote another book, The Winter's Here. And yeah, so I think we could have some kind of domestic problems in the US. We're already seeing that. Uh, yeah, that could lead to civil war. I mean that is. concerning. It's and that happens in the winter during the fourth turning, just like it did in the 1860s. In 1930s to 40s, it was a bit different. It was more international. But yeah, I think it's concerning. And but in the US, at least, you have states that are more, they lean more towards one way of thinking and others to another way of thinking. So at least you can go where you probably feel a bit more like you relate to the people there. But
Hmm.
yeah, I think it's a big problem. That's probably the other reason why foreigners are not buying as much treasuries, because would you want, um, you know, what, to leave reserves, have reserves of a country that is breaking apart, it looks like.
Hmm. Hmm. So if we think this is all going to zero, what does what does like a monetary reset look like? How does that even take place?
Well, I've said that just the price of gold going up like it has in the last 25 years is kind of a reset. Um, I mean, back in 1930s, gold was part of the system, so the reset was like done overnight, and they changed the value of the currency versus gold. But yeah, I guess the reset, I've said as well in the past that a good way to know whether the reset's finished from, let's say, the overvaluation of financial assets to fair value versus real things. And gold is like the indicator for that. You can look at the Dow Gold ratio. You've had a few resets over the last 120 years. One was in 1933. The Dow Gold ratio got down to 2. And from 33 to basically 1980, there was a credit boom. Um, yeah. I mean, the stock market took a while to get back to the all-time highs from 1929. I think it was 1954. And then you had another, well, it was actually to 1966. The Dow Gold ratio got to 26. Then it dropped to 1 in 1980. That was another reset. And it was from 1980 to, I would say, 2020, 21, that we had another credit bubble. And now I think it's deflating. And I think it will deflate via gold going up a lot faster than financial assets. And when we get to close to one Dow Gold ratio, it could even go below that. You might only need like half an ounce for a Dow. Then I think we'll be near the reset. Oh, the reason I say half an ounce is because in 1933, it went from like 20 to 1, 20 to 1 at the top in 29 to down to 2. In the 1980, it went from 26, 28, and 66 down to 1 to 1. So yeah, it's like a megaphone and it's getting lower. But I think 1 to 1 is it will mean it's very close, but it could make a big difference if you sell your gold at 1 to 1 and then it still goes half to 1. So
Yeah.
maybe the thing to
Well,
do is to sell a bit of it for stocks at the time. But yeah, and then we're going to start again. It's going to inflate, you know, credit is
mm,
going to grow again, and and people will have forgotten what happened. That's why these are such long-term cycles.
yeah, yeah. So it kind of excites me, but it also scares me, right? Like thinking that gold could be at that ratio, like my God, I don't think the world's in a good place at that point. So it kind of excites me, but it also scares me. Like, what is going to be happening? Because if gold's worth that much, how much is a loaf of bread?
That's right. And I mean, it wasn't in a good place in the early 30s.
Hmm.
Uh, it wasn't in a great place in the early 80s as well. And we can see already that it's not in a good place right now with all that's going
No,
on
no.
politically, geopolitically. Yeah, it's not great. But
Oh, even
You
mental health, even the mental health of the citizens, right? Like the depression and like the what we're dealing with, I think is just a complete societal problem, right? Very, very difficult. So what are you telling your people to do with their money? Are you telling people go physical, go a little bit physical? How do you balance your portfolio?
Well, I don't give financial advice. I tell them what I think and what I do. I mean, I prefer a lot more physical, having physical gold and silver, but I also have miners, and I haven't been in the game as long as you, 25 years. I started probably 20 years ago, and yeah, so it depends on people how much risk people want to take. If they think the system is under threat, systemically under threat, then I would lean more towards having physical gold and silver outside the system, because even if you have miners, uh, you never know. Like the broker that holds your securities, they might go bust, and it might take a very long time to settle things. But at the same time, it's worth the risk because I think the miners are still very undervalued. They're almost like value investments right now.
Hmm.
Not all of them, of course. The junior exploration companies are more speculative.
They're worth
And
nothing till they find something,
yeah,
right?
it's like a treasure hunt, I guess.
Yeah.
And I've learned that over the years. And yeah, so have a what I tell people that I've done in the past is if you want to build a portfolio, is look at the funds like GDX, GDXJ, and see what they hold. It's all public information. Then pick some, pick some companies from there, and yeah, do it like that. And I mean, as I said, you have to decide if you want 90% in physical and 10% in stocks, because those stocks, when they start moving, that 10% could become 50% of what you hold, because they will be like you're not leveraging, but they will move a lot more than physical gold and silver. So that's what I tell people, and I tell people as well to stay like calm, because they want you scared, the powers that be, and that's the reason maybe for the mental health problems. But yeah, in the end of the day, we can't we can't really change the world that much. We can try to tell people what's going on, but you gotta live your life. And yeah, it's not nice, all the stuff that's happening out there. But yeah, that's what I try to
You just said something there that I want to dive into a little bit longer. They want you scared.
yeah.
Talk about that.
Well, because when you're scared, you don't do the right things, and you accept their solutions to problems, which are usually not really good solutions. They're good solutions for them, but not for you. So, and if you're scared as well, you don't think clearly. So that's why. Yeah. I mean, I don't like FDR or any politicians, but he said one thing that that is worth like listening to is you only need to fear fear itself, right? So that's what he said.
Yeah.
So
Yeah, no, that they want you scared. I think I might lose sleep on that one actually a little bit and start thinking about that a little bit more because they do want you scared. Because when you're scared, they can get things out of you. Period.
and can get you to comply.
Yeah, get you to comply about anything you want, right? Like put your money in the banks, get more credit card, get more debt. Oh, don't buy physical gold, right? Like all those things, they can get you to comply. Oh, I love that. That one might
Hmm.
go in my book there. They want you scared.
Yeah.
Okay, so let's talk about silver quickly. It's been a little bit of a misnomer, it feels like. Over the last little while, just never really keeping up to gold, all the silver stocks lagging. We're starting to see some action in silver lately. Anything
Yeah.
changing fundamentally there, or just it's starting to play catch up and
Yeah, I mean, fundamentally, I think it hasn't changed because there's been silver deficit production for the last few years. I think the change that's happening is that there's so much demand for physical gold that the bullion banks, who usually try to keep silver suppressed, they're running out of rope and they're having to cover. And I think any market that's like manipulated or controlled, you can't, it doesn't last forever. And I know that silver has been quite frustrating. We were at 50 in 2011 and we're still only above 37 the spot today.
Hmm.
And technically, though, I think that 35 level is really important. We broke it 2 weeks ago or
2 weeks
so.
ago, yeah.
Yeah, and now it's 37. I don't think there's much resistance up until the low 40s now. So I think it's looking good. And I think, yeah, I think it's gonna outperform gold. It always has, like in the since the post 71 era, when there's
Hmm.
a major bull market in precious metals, towards the end, silver outperforms. And I think we still have a few years left. So I think silver is going to outperform gold, but it's Jim Sinclair said that silver is gold on steroids. So you gotta,
Yeah, yeah.
it's really volatile. So you have to keep that in mind. But I love silver just as much as gold.
So
You
should
know,
we keep that in mind? Like, well, if history repeats itself, and silver starts to outperform gold at the end, is that something that we should be keeping in mind when silver starts to really ramp up, really outperform, kind of keep?
yeah, I think silver could be, you might want to like be careful and get out, maybe of your silver miners. I
Mhm.
think take some profit because, but I think we're still in early days, I think I was looking at a chart of silver, long-term chart, and we're breaking out these technical trend lines. And it looks like when we broke out, gold broke out last year as well. There's a really long-term trend line coming from like 1980 to 2011. And it looks like silver is doing what gold did like last year now. So to me, that tells me that silver is gonna really motor
Start.
ahead. I wouldn't be surprised if we're at 50 before the end of the year. It could be conservative, that number.
I'll bring it back on December 1st and we can pull a report card. So, hey, last question. You kind of almost touched bases. Like, where do you think in general we are in, like, you talk about these long cycles, maybe 20 years or whatever. Where do you think we are? I was thinking about this morning. I'm just like, I don't want to say we're early anymore because I don't think we're early, but I don't think we're late. Like, I feel like it's just kind of almost people are arriving at the stadium kind of thing, ready for, to hear the national anthem of the baseball game. That's kind of where we are. Like, where do you think?
Yeah. Well, I think it might be a little early. I think some people haven't heard there is a game, the majority of people. And people like us, we've got the ticket to the game and we are on the way to the game.
We've had seasons tickets for 10 years.
Yeah.
Yeah,
Well, we're
yeah.
going for the Super Bowl, the final. Yeah.
Yeah, so you still think we're early, generally speaking.
Yeah, I mean, I listen to other people as well. You got to learn from other people. And Bert Doman is his name, and he was involved in the 70s bull market. And apparently he said in 1980 that he looked at the cycles going back a few hundred years, even before the US became a country. He had to look at English numbers of gold price. And he said to his clients, well, we topped now, 1980, and there's going to be a bear market for another 20 years. And they thought he was crazy, and he was right. And then he said, and then after that, there's going to be a 32-year bull market. So uh, I'm not saying he's going to be right, but so it looks like we still got quite a few years left,
Yeah, yeah.
2032. I've looked at it in terms of we spoke about that gold silver ratio reset. I worked out that from 33 to 1980, that was 47 years. And then if you do 47 years from 1980, that's 2027. So yeah, I think we still got, we're like you said, it's starting. It's
Hmm.
starting, and it's still early days because most young people and a lot of even older investors, they're more interested in cryptocurrencies
Still.
and Bitcoin. I mean, I've got an account here in the UK, my brokerage account, and when I log in now, it keeps popping up. You can trade crypto now. And I just say maybe later, it's like so they're pushing
S-
it. So they're not saying,
Spam.
yeah, it's not spam, but yeah, it just goes to show, yeah.
They're
So
pushing it very, very, very hard still. Very, very hard, right? And yeah, we could probably have another episode on how much we don't believe in that cryptocurrency. So back December 1, we'll bring you back. Mario, thanks so much for your time today. I think you got some great insight. I think you and I speak the same language, and I think we agree on these things. I know my listeners will appreciate what you have to say. And yeah, sometime down the road, I'd love to have a recheck back in with you just to see where we are in the cycle and what's happening in the market. So really appreciate that.
no problem. And I look forward to coming on again and speaking with you.
Yeah. Thanks so much. Have a great day.
You're welcome. You too.